Good day, everybody. Sil here. Thought I'd provide here another market update and what's going on here recently. We know there's been a lot of volatility in the last several months. We started seeing that pickup occur back in August, if you recall. It tapered off a little bit after a decent bullish run at the end of the year, last quarter, 2015, and of course the volatility picked up again at the start of the year. So with volatility, when you see it, typically it precedes quiet, right? There's usually a quiet before the storm. So if I take you back a little bit, and we're going to take you to several different charts, you can see what happened before. There was a lot of choppy action. It was fairly volatile, then it got pretty quiet. Things were chopping around, and in fact, looking almost like a topping-like formation at that time. So when things get choppy, preceding a lot of volatility and potentially the large market crash, you're going to see head and shoulders formations, double tops, triple tops, things of that nature. And so that's essentially what we were seeing. If you take a look closely as I draw, you're going to see the series of highs coming around, and then we're getting a rounded like formation. We're seeing multiple doji-like formations at various locations on this chart. There's one here. There's an upper shadow rejection there. There was a few other ones down in here. You can see this little cluster here. There's a couple of doji high wave formations here. Other bearish type formations, again, upper shadow here, doji formations here, high wave, evening star formations, and a lot of these formations at these tops that were giving us clues as to the vulnerability and the lack of momentum to push markets higher. So when markets crash occur, this is the sort of thing you might see on a daily chart. And again, there's the volatility that we had thereafter. I want to take you over to a weekly and then also a monthly chart. Currently, of course, at the time of this broadcast, the monthly will not give us a clear picture, but that's the part of this update as well, is to give you what happened, what's happening now, but also what are we looking forward to going forward as well. So when transitioning over to a weekly chart, this is the S&P. You can see the beautiful bullish run that we had. The moving averages I have here are the 20 exponential in red and a 50 simple in blue, and for the simple reason of very common moving averages that most people use. But in this case, we're looking to see what kind of activity occurs. There's the rolling over I talked about on the daily chart. There's the volatility that picked up. And at this point, what we're seeing in terms of somewhat of a, I guess I can call it an ominous sign, is with all the multiple doji formations as well and rejections and resistance levels here in the S&P. On the weekly chart, we saw the collapse, and we are now seeing, of course, the dead cross that is so important to identify. Here is where it was, the 20 dropping below and closing below at this point, the 50 moving average in this case. Price action, of course, did try to reverse, as we know, at support levels with these large lower shadow rejections coming back up. But again, further rejection and further rollover that seems to be evident and continued here as a rounded top, muffin top, however you want to describe it, with somewhat of a neckline that seemed to be established right here. Though, of course, we know there was a drop here, and now we're dropping here, and we're retesting all these support levels at this point, and fairly reasonably based on a measured move of that high to low of that muffin top area. But with the dead cross at this point and a retest of price actions in that level, we saw prices drop again. So it's going to be pretty important for the bulls and market to start waking up and getting something done. Support levels, as mentioned, with these lower shadows is present. We're seeing now a moving average, in this case the 20 exponential, dropping fairly precipitously, and we're finally seeing a flattening but now a slightly dropping 50 simple moving average in this case as well. So we've got the chop action that we saw on the daily chart with the volatility. Now we're seeing the dead cross of the 20 exponential below the 50 simple moving average, with all the price candles and all the candlestick formations certainly establishing themselves regarding a bearish signal, including the overall pattern. And we're seeing, yes, some bullish activity here and trying to reject the support levels and bounce higher and reject this whole bearish nature. But the monthly chart will be important to watch for as well as we move on to that next. So now we move on to the monthly chart, and this is going back obviously several years, back in 2008, the big collapse and market crash that we had. And look where the markets are now compared to that time frame. Pretty instrumental. A few things I would point out is the measured move that occurred and the extension that occurred at this 2100 level on the S&P 500. So one predictive value that occurred with this top as well was the fact that there was essentially an extension on the fibs that occurred at that level, so you can see what happened based on the original drop that occurred in the market crash. The markets came up into the 1618 extension, and that's where they pretty much found a lot of resistance, where we saw a lot of that chop action, all the doji formations, etc., rejections at resistance near 2100 on the daily chart, and we've seen that volatility pick up since that time. So with a moving average that's now rising, looking for support near 1800, we have the lower shadows. We've got the 1272 extension. That's part of that support level as well. They're looking heavily here for a support zone, and if they can hang on, then maybe there's a shot, there's a chance for the markets to rebound. Below these levels, we're going to start looking obviously a whole lot lower if the markets collapse. Now, the last signal we're going to want to start looking at, if I can zoom in a little closer, you can see that I've added an additional moving average in black, and that black moving average is a 10 simple moving average, and that 10 simple moving average you can see is hovering above the 20, of course, but in this case what's important is where's price action relative to that moving average. So when you start looking back in time, especially when the market crashed back in time, it held above all the other moving averages. We had price action closing below, retesting. Eventually, of course, this is a monthly. Obviously, moving averages are crossing over, but essentially that's what we're looking at, is when price action has dropped below that moving average and remains below, and then you have the crossover, the dead cross on the weekly, and all that chop action that we talked about in the daily as well. You've got a configuration overall of a potential for a very large market crash. So far we've got all of the signs, all of the signals are there. It's a question of whether they hold this 1800 level now. Can they get back up and over 2100 to then continue its original bullish move and bullish market to the upside? So we're in that zone now, 2100 above, 1800 below. Critical levels in terms of the S&P and where to watch, and of course price action on the monthly, price action and particularly moving averages on the weekly, and we can then see whether or not the markets are in fact in a major market crash or not. So hope that helps. Watch for those signals going forward. We'll do some more updates so that you can always remain apprised of what the clues of the candlesticks are telling you, along with the confirmations of all the other Western indicators.